So why do we look at high probability calendar events? It's because certain events, when you see surprise readings, give you a clear indication of the instrument's direction. So here we see the European PMI prints. We started off with French data. It was too mixed to potentially enter a euro dollar long, but once we saw the German data, as we highlighted at the end of the French data, if all of these came in above market's maximum expectations, perfectly reasonable to expect some upside in the euro. We had the dollar weaker on the session due to Trump's announcements that he preferred not to use tariffs on China. That is a deflationary comment, and that allowed the dollar to weaken. So euro-dollar upside was the obviously currency choice. We were looking at that, and then you can see here the euro-dollar from the release of the German data moving up from the R2 to the R3 pivot point, a reasonable target for sure. And if you just take a look at the futures market, you can see here I took some euro long positions, and you can see that those euro long positions moving up for a total profit of $157 when you allowed for the commissions. And you can see that was a very clear tradable opportunity on those risk events as it was released. Now, you don't get these risk events every day, but when they do come, they're high probability and well worth looking at. So that's why we look at the calendar to find these high probability trading events. Now, looking ahead for the first week of February, there's three events that are really jumping out to me. The first one is the US ISM Services Print. Now, the US economy is a service-driven economy, so anything that comes out for the ISM Services Print that surprises markets is likely to be paid significant attention to. So if we see a very strong number here, it's likely to mean that the Fed are less likely to need to cut interest rates, and that should be dollar positive and stock negative. So that's to look for. And conversely, if you see a big drop in this print, if there's reasons for concern with a below consensus print, then that will mean there is some need for the Fed to consider interest rate cuts, and that should be dollar negative and stocks positive. So that's the first risk event that we'll be looking at on Wednesday. It's one to definitely catch. The next decision is the Bank of England interest rate decision. Now, the Bank of England are an interesting place now. You sort of sense this could be a time when they really start to signal a more dovish approach. The short-term interest rate market expectations is that 87% they're going to cut by 25 basis points, 13% of a hold at the time of making this presentation. So what I'm looking for here is some of these voters to move into the cutting camp. Okay, so what I want to see is a majority of voters looking for a cut, and then I want to see some dovish guidance moving forward. It'll be a tricky one to really trade, but when we see an expectations of what's expected for the voters, it'll be very interesting to see if some of the more hawkish members, like Catherine Mann, move into the interest rate cut camp. So we'll be looking at the vote split on February the 6th. That's likely to provide the best opportunity and the forward guidance. So it'll be a fiddly one to trade, but it's definitely worth looking at. And you sense the market is in a place where if they can clearly sell the pound, and if the Bank of England starts to clearly signal more than 3 interest rate cuts this year, that could be a good opportunity for pound selling. It's certainly one they're going to be looking at on Thursday. Friday got non-farm payrolls and University of Michigan print. Now, both of these are important. The non-farm payroll print is going to be important for the very similar reason to ISM services. If we see strong US growth in jobs, if that's maintaining a positive number, coming in within expectations, then that means the Federal Reserve is under no urgency to cut interest rates. So that should be dollar positive and stock negative. So if it's a very strong number, you'd look for dollar yen buying most likely. You'd expect dollar buying, euro dollar selling, and stock selling on a higher for longer mandate, because the Fed will be able to take their time with interest rate cuts. And the other side of the coin is if it comes in below market's minimum expectations and you see a surprising drop in US jobs, then that puts some urgency on the Fed to cut interest rates, and that should be dollar negative, stock positive, because it means sooner interest rate cuts are likely to come. So non-farm payroll print is going to be an important one. University of Michigan print is also important in terms of the inflation expectations. This surprised markets, the last print, because there was a big jump, particularly in the 5-year inflation expectations. So I'll be keeping a careful eye on that. How much inflation is the US consumer seeing? If it's sort of pushing up, again, above sort of 3.4, 3.5% for the 5-year inflation expectations, then we could see some sharper selling in stocks, because higher inflation means the Fed's going to have to keep rates even higher for longer, and it might start to bring back questions about whether the Fed will even have to still hike interest rates this year. So we're looking at that, but preparing for the University of Michigan print the same time as the non-farm payroll print at 1:30. So that's the top 3 events that are on the calendar this week, and we'll be trading those as 3 risk events.